Yeah, what's up, my people? What's up, my people? As you all know, it's your boy Crown Forex Tips, right? It's your boy Crown Forex Tips. Basically, what I have for you guys is the series 2 of what I did in my last YouTube channel. So if you have not watched my last YouTube channel, just go right now, pause this, you can pause this and go right now to watch it. So what I did in my series 1 is the chart patterns that we have that I personally trade in the market. And I made mention of 4 patterns, right? The double top, the double bottom, the head and shoulder pattern, and the inverted head and shoulder pattern, right? So in that series 1, I talked about the double top and double bottom, how you can easily identify those patterns in the market and how you can easily trade them easily without any stress, right? So if you have not watched that video series 1, go and watch it now, and don't forget to subscribe on my YouTube channel. If you have not subscribed, subscribe now and click the like button. Subscribe so that anytime I make a video, anytime I post a video, you can easily get a notification on your phone and watch it, right? So it's just about to build your psychology, about to have an in-depth of what is happening in the market, right? So without wasting much of time, I want to make this video as short as possible. As you all know, I always go straight to the point. I don't beat around the bush. I'm always a straightforward guy. I go straight to the point, give you guys the hit back to back. So let's go into the chart and see what I have for you guys. So in this video, what we'll be looking at is the series 2 of the series 1 that was done in my last YouTube channel, right? So today we'll be looking at the head and shoulder and the inverted head and shoulder. So let's go to the chart. Let's see what and how we can easily identify the head and shoulder and then the inverted head and shoulder and how we can easily trade them. So let's go straight to the chart and see. So basically, for you to identify these charts, right? For you to identify this head and shoulder pattern, let's talk about the head and shoulder pattern. You need to understand that the market is actually in an uptrend. So the head and shoulder pattern means a bearish, a reversal in the market, and the reversal is a bearish move, right? So you need to understand that for you to see a head and shoulder, that means the market is actually in an uptrend. So let's say the market is coming from this low to this high, right? When the market got to this high, the market created something at this high, right? The market created a resistance at this high, right? So once the market creates a resistance at this high, the market did what? The market came back down and did what? Break this previous resistance. The market came back down and went back up again to break this previous resistance. The market break it and then ended here, right? So the market came to this point and also create something called a resistance. So if you look at this chart, you can see that the market is actually trending up from this low to this higher low, from this low to this higher low, right? So, and from this high to this higher high. So that is the uptrend movement in the market. So anytime you are looking forward for an head and shoulder, you need to understand that you have to look for an uptrend. So you see it at the end of the uptrend. So the market creates a higher low and the higher high, right? So when the market got to this resistance, the market couldn't break this resistance and then went and came back down, right? The market came back down to this point and then did what? And went back up again and retest this previous high, right, the market retests this previous high, right? Once the market retests this previous high, that gives you an insight that the market is actually creating something. That is the head and shoulder. This is the head, right? This is the head right here. This is the left shoulder. And at the right shoulder, that is where you should watch out for your entry. You can enter in two ways, right? You can enter in two ways. If you are an aggressive trader, you can enter at the right side, right at the right side of the head and shoulder pattern. Once you see your confirmation, right? So once you see your confirmation, you can enter at the right hand of the head and shoulder pattern and then let the market play out, right? Let the market play out. So what I want you to understand is that when you see this structure, right? When you see this structure from this low to this higher low, right? To this higher low, right? You can see that the market is creating an uptrend. But at the moment that the market touched this resistance and came back down, you will notice that something happened. The market came all the way from this top and break this trend line, right? That's another insight. So the market break this trend line gives you an insight that, oh, the market is about to do something, right? Even though you don't or you might not have aware of what the market is about to create at that time, but you know that the trend line is broken. That should gives you an insight that, oh, is the market ready to change the trend or to change to have a structure, a new structure in the market. So that's the first thing you should know. Once this trend line is broken, that's your first signal, right? So the trend line is broken and the market did what? Came back to retest this previous resistance, right? Came back to retest this previous support, right? This previous support, now a resistance. And once the market got to this point, once you see your confirmation, as an aggressive trader, you can enter the market. But if you are not an aggressive trader, right? If you are not an aggressive trader, you can wait for the market to do what? To break this neckline. Once the market break this neckline, here of this neckline, you can enter the market after the close of the candle, right? So, and if another thing you should understand that from this top to this swing point, from this swing point to this swing point is something that tells you that the market has changed the trend. It is now a downtrend. So that should gives you another insight that the market is now a downtrend, not an uptrend. So that is the easiest way you can identify the head and shoulder. So let's go to the inverted head and shoulder before going into the chart and see how we can easily identify it on the chart, right? So we understand that the inverted head and shoulder simply means a bullish reversal. So that means the market is actually coming from the top down to the bottom, right? The market is actually a bearish, is on a bearish movement. But at a point, the market changed the pattern and started going up. So how you can easily identify it is that the market is coming down, right? Got to this point, created a support, right? The market creates a support at this point and then goes back up. The market goes back up and did what? Come back down to break this previous support, right? To break this previous support and then went and go all the way down to this point. At this point also, you should know that something is about to happen, right? Something is about to happen because this is another support. So if you put your trend line, you will understand that the market is creating something that's a downtrend movement, right? A downtrend movement. But once you notice that the market is unable to break this support and then went back up to break this previous support, which is now a resistance, right? Once the market break this previous this present resistance, which is the previous support, right? And then came all the way back down to retest this previous support, right? This previous support, right? You should know that something is happening already in the market, because once you use your trend line from this point down to this point, it actually tells you something that the market is on a bullish move now. So as an aggressive trader, if you are an aggressive trader, you can enter the market at this point. But if you are not an aggressive trader, right, just wait for the market to do what? To break this neckline. Wait for the markets to break this neckline and enter your trade. So that is actually the easiest way to do what? To identify the head and shoulder, and then the inverted head and shoulder that we have in the market. So let's go to the chart and see how you can easily identify it in the chart, right? So this is GBP JPY, right? This is GBP JPY. If you look at this GBP JPY, you will just hold on. Let me delete. Okay. If you look at this GBP JPY, you would see that from this point, right? From this point, the market is actually doing what? The market is going up, right? The market went up, tested this resistance, right? Tested this resistance, and you can see that if you trace it back, that's actually a previous resistance as well. So the market went back up to test this previous resistance and then came back down a bit. So the next thing you see in the market is that the market went all the way back up, right? The market went all the way back up. So if you understand the market structure, right, you know that the market is creating something which is an uptrend. The market is creating something which is an uptrend. And immediately that the market got to this point, the market couldn't go up again. The market came down and broke this trend line and went all the way down. So immediately this market broke this neckline, you should have an insight that something is about to happen. Maybe a structure is about to form. Just wait and give yourself a rest to see what the market is doing. You don't have to jump into the market as a newbie. Just hold on, let the market gives you that right, and do what? And follow the big boys, follow the big moves in the market. So you can see that the market broke this trend line and did what? And came back to this point. And if you trace this point, you will see that it is actually a previous resistance, which is this. So the market came back to retested this previous resistance before doing what? Before going down massively, and it's still going down, right? So if you are an aggressive trader, you can actually trade, right? You can actually trade from this point. If you trade from this point, let's see how many pips you would have caught, right? You would have caught like 219 pips. Wow, that's massive. 219 pips. But if you are not an aggressive trader and you wait for the market to retest, to came back to this neckline, right? To actually break this neckline, rather. Once the market break this neckline and you enter your trade, let's see how many pips you would have caught. That's 159 pips. So that's also still massive if you use a good lot size to trade this kind of market, right? So that is actually how you identify your head and shoulder. Let's look at the inverted head and shoulder. We'll be using this same pair, GBP JPY, to do what? To identify the head and shoulder that we have in the market, right? That we have in the market. So let's quickly look at the inverted head and shoulder. So if you understand the inverted head and shoulder, you should know that the market is actually coming down, right? So from this point, this actually shows the inverted head and shoulder, but not on a clearer view, right? if you see the market is coming from this top all the way to this bottom, right? And then when the market goes to this support, you can trace it that the market also tested this previous support here. And then the market did what? The market went all the way back up and did what? The market came back down. From this structure now, you should know that it is a what? It is a downtrend rather, right? It is a downtrend. So the market is actually coming down. It is a downtrend. The next thing that the market did, the market went all the way up and did what? And broke this previous support and closed up here. So the market came back down and did what? And retested this before doing what? Before going up. So you can see that even though it is not clear, but you can still see that a pattern was formed, which is inverted head and shoulder. So if you an aggressive trader, you can enter the trade at this point. So let's say the pips would have caught. If you enter at this point, that's 200 pips. That's massive. If you use a good lot size, and if you are not an aggressive trader, you can wait for the trade to break this neckline and enter your trade, right? That's 148 pips, which is still good, right? So I think I have a clearer inverted head and shoulder that happened on the 4th, I think on the 4th. Yes. So this is it. It happened on the 4th of July, right? So you can see that the market is actually coming from the top to this bottom, right? And then the market went all the way back up from here, back up, right? From here back up. And then the market broke this support. So the market eventually broke this support and created the edge. And then the market came back down and then tested this previous support, right? Tested this previous support, now a resistance. The market tested this previous support, now a resistance. The market broke the resistance and then came all the way to this point. The market came back down, right? Came back down and created something. So if you can see it from this top, you will see that the market actually creates something, right? The market actually created something, right? The market actually created something. So the market creates something which is a downtrend from the beginning if you use this trend line, right? And after creating that, if you use the trend line again, you see that something is happening. When the market came back to retest this previous support, right? You can see that something is actually about to happen. So as a trader, or if you're an aggressive trader, you can enter from this support level and see the pips you would have caught. That's 196 pips. But if you are not an aggressive trader, you can wait for the market to do or to break this neckline and you enter your market. Once you see your confirmation, right? Once you see your confirmation, that's about 125 pips, which is still good if you use a good lot size. So once you see your confirmation, you can enter at any of those points, right? You can enter at any of those points. So it is actually based on how you are able to identify the chart. Most time, it is not always clear like you people would see on a diagram, because it's a chart, right? It's a chart. So once you are able to identify it, just have the knowledge or the idea of what the pattern is and be able to identify it. Once you're able to identify the pattern in the market, then wait for your confirmation and then take the trade. Let the trade play out, right? Let the trade play out itself, right? Don't force the market. Don't force the market and do any sort of things. Just let the market play out. After, once you've identified and you know where to enter, so now you can understand the two key areas that you can enter the market once you see a head and shoulder or an inverted head and shoulder in the market. So that is basically the best way you can enter the market and also identify the chart in the market. So like I said, this is series 2 and I want to make it as short as possible. I hope you guys gain something from this video. If you gain something, don't forget to subscribe to my YouTube channel and then click the like button, right? Click the like button right now, because more tips are going to be dropping. I'm going to be dropping more tips for you guys when it comes to Forex trading, right? So click the like button and subscribe to my YouTube channel for you to be able to see an instant video once I drop it. So back to back. Thank you guys. Watch this video. I'm going to upload it on my YouTube channel and name it series 2 because in series 1 we dealt with the double top and double bottom. So this is the series 2, which is the head and shoulder and inverted head and shoulder. So thank you guys. Bye.